Are you tired of hearing people talk about picking the next Tesla or the next Apple, while you're still trying to figure out how the stock market even works? You see friends announcing their latest investments on social media, and financial influencers boasting about doubling their money overnight. It sounds exciting but also confusing. Because deep down, you're thinking, how do they even know which stock to pick? Well, here's a secret most beginners don't realize: even the pros struggle to beat the market consistently. Let's be honest. Picking individual stocks is hard. It's like trying to guess the winner of a 500-horse race based on a few random clues. Even seasoned investors armed with high-tech tools and fancy research reports end up wrong more often than they'd admit. When you invest in a single company's stock, you're betting everything on that one company's future. And if things go south, a bad earnings report, a management scandal, or sudden competition, your investment takes a hard hit. Suddenly, what felt like a smart investment becomes a stressful gamble. And there's another problem: time. To pick the right stock, you have to constantly study market charts, company earnings, and breaking news. You have to stay alert to every little movement. Most of us already have full-time jobs, and unless your dream hobby is reading financial statements on a Saturday night, that's not easy to keep up with. Investing through individual stocks can feel like balancing on a tightrope without a safety net. So what's the alternative? How can you still invest, grow your money, and build wealth without needing to watch the market every day? That's where ETFs come in. ETF stands for Exchange Traded Fund, and they've completely changed how millions of everyday people invest. Imagine an ETF as a ready-made investment basket filled with lots of different companies. When you buy one share of an ETF, you're not putting your money into a single business. Instead, you're buying tiny slices of many different companies, sometimes hundreds, even thousands. It's like investing in an entire market in one simple step. Still sounds abstract? Okay, let's make it deliciously simple. Imagine a pizza. Yes, a pizza. Think of an ETF as a big pizza. Each topping represents a company's stock. If you buy just one stock, say, Apple, you're choosing only pepperoni. But what if mushrooms, peppers, or olives suddenly become more popular? You miss out on the flavor, right? Now, buying an ETF is like ordering the supreme pizza: pepperoni, mushrooms, onions, all the good stuff. You get a little taste of everything in one slice. If one topping isn't so great this time, others still make your meal satisfying. The same logic applies to ETFs. If one company's stock dips, the rest of the portfolio helps balance things out. You're still enjoying the full slice. This is why ETFs are so powerful. They simplify investing without watering down the opportunity for growth. In one purchase, you're instantly diversified, meaning your risk is spread out. But there's even more to love. Let's break down the three biggest benefits of ETFs: diversification, low cost, and ease of trading. First, diversification, the golden rule of smart investing. You've probably heard the saying, don't put all your eggs in one basket. ETFs make sure you don't have to. When you invest in just one or two companies, your fortunes rise and fall with them. But with an ETF, your money is automatically spread across many businesses, industries, and sometimes even different countries. If one sector slows down, others can keep your overall investment steady. For example, an ETF that tracks the entire S&P 500 gives you exposure to 500 of America's biggest companies all at once, a built-in safety cushion for your portfolio. Next up, low cost, and this is where ETFs really shine. Traditional mutual funds often charge high fees for management, because there are people making decisions behind the scenes, buying this, selling that. But most ETFs are designed to simply track a market index. They don't need expensive human managers. That means fewer costs for the company to run the fund and more savings for you. The small fee ETFs charge is called an expense ratio. Most good ETFs cost less than 0.1% per year, literally $1 for every 1,000 you invest. Compare that to mutual funds that might charge 1% or more, and you realize that small difference can add up to thousands of dollars over time. Lower fees mean you keep more of your profits, which is exactly how it should be. The third big benefit? Ease of trading. ETFs are incredibly simple to buy and sell. They're called exchange-traded funds because they trade on the stock exchange, just like individual stocks. That means you can buy or sell an ETF in seconds through your brokerage app, see the price in real time, and have full control over when to make a move. There's no waiting until the end of the day for the transaction to go through, like with mutual funds. You can even set up automatic purchases weekly or monthly, so you're investing steadily without having to stress about timing the market. It's flexible, modern investing that fits into real life. Let's look at some real-world examples to paint the full picture. If you're in the United States, one of the most popular ETFs is VOO, run by Vanguard. This ETF tracks the S&P 500, essentially the 500 largest companies in America. By buying even a single share of VOO, you're investing in giants like Apple, Microsoft, Amazon, and Disney. You get instant exposure to a huge chunk of the US economy. Another fan favorite is QQQ, which follows the NASDAQ 100, a group of top technology and growth-driven companies. Think of it as your tech-focused ETF, packed with big names like Google, Meta, and Nvidia. These ETFs have helped millions of Americans build wealth steadily without playing stock market roulette. Now, if you're in the United Kingdom, the principle is exactly the same. A popular ETF there is VUKE, also by Vanguard, which tracks the FTSE 100, the 100 biggest companies listed on the London Stock Exchange. Buying VUKE means you invest in well-known names like Shell, Unilever, Barclays, and AstraZeneca, the pillars of the UK market. And for those who want a global taste, there's VWRP, which follows thousands of stocks from all over the world. It's like owning a piece of the whole global economy, from the US and UK all the way to Asia and emerging markets. Simple, diversified, and powerful. So how do you actually get started with ETFs? Thankfully, it's easier than ever. All you need is a brokerage account, which acts like your online investment wallet. In the US, some of the most trusted options are Vanguard, Fidelity, Charles Schwab, and Robinhood. If you're in the UK, you might use platforms like Trading 212, Freetrade, Hargreaves Lansdown, or Vanguard Investor. Once you've opened your account, search for the ETF's ticker symbol, like VOO or VUKE, and decide how much you want to invest. You don't have to start big, many platforms even let you buy fractional shares, so you can invest smaller amounts regularly. A smart approach is to invest a fixed amount every month. This strategy is called dollar-cost averaging. It helps smooth out the ups and downs of the market because you're buying both when prices are high and when they're low, averaging out your cost over time. Over years, that consistent habit beats the risky game of trying to time the market. Let's take a moment to zoom out. ETFs have completely revolutionized investing. They've opened the doors for beginners to grow their wealth without needing a finance degree or a background in Wall Street. They make diversification automatic, they keep your costs low, and they're simple to use. Whether you're investing for the first time or looking to simplify your portfolio, ETFs are the modern investor's best friend. So here's the bottom line: ETFs are baskets of investments, stocks or bonds wrapped up in one powerful product. They're diversified, low cost, and easy to trade. They take the stress out of guessing which company will soar next because you already own a slice of them all. ETFs aren't some fancy insider secret anymore, they're your simple gateway to long-term financial freedom. If this video helped make investing a little clearer, make sure to hit the subscribe button and join our community here at Ledger Logic. We break down money topics the way a friend would, with clarity, confidence, and a sprinkle of humor. Because understanding your money shouldn't feel complicated, it should feel empowering. Thanks for watching, take care of your finances, and remember, invest with logic.